Hey guys, Mike here. So today we're going to talk about Alibaba stock, or BABA as you may know it. And I never thought I'd do a video on this company, but the truth is the stock has been beat down so much it has my attention, and it's had it for a while. It's been on the radar. I've been waiting, and it breached a key level today, which is 130. Hadn't breached that level since 2018. So now the risk reward gets so skewed in one area, or one direction I should say, that I have to pay attention to this, okay? And start, I've already formed a plan of what I'm going to do. And so I wanted to at least bring to you, and present to you the two arguments, right? You got two camps. One camp says, stay away from Alibaba stock, don't buy it. It's like a nuclear meltdown or something, right? And then the other one is, which is where Ray Dalio is and why he doubled his position in Q3, which you'll see, oh no, this is why you want to buy the stock, okay? And there's multiple ways to play this. I definitely want to get your insight for those who are in it, for those who are thinking about getting into it, and then those who say, no way, no chance, no how I would ever buy the stock, okay? And so if you're getting out of it, please hit the like and subscribe button for me, guys. I really appreciate that. And let's go ahead and get into it by looking at the chart and this massive drop that continues for this company. And start with Alibaba's chart, guys. I mean, you can see we're talking about a 60% drop in a little bit over a year's time, which is pretty unbelievable. And you see that key level at 130 right there? Well, it breached it today into 127. You hadn't seen that since 2018, where it touched it twice. And you have to go back to 2017, where it actually breached the 130 level. So this has been, what was that, 4 years? And it's been published since 2014. As you can see, there's not a whole lot of support there. You can make a case for 125 if you kind of spread that out a little bit. From there, you're looking around probably 115-ish, somewhere in there. And so this has got some people that are holding the stock a little bit worried. And for those of us who are looking to maybe even get in a position, whether it's a swing trade or whatever, kind of licking our chops now. And so the first argument I'm going to take you into is with the camp of the people who are pro Alibaba and why they're getting in this stock. And you want to talk about a big fall from grace. It's probably, I've been racking my brain trying to figure out a company that at this level that has fallen like this, when it's not in a crash, but actually in a bull market, right? And so Amazon lost 90% back in the dot-com bubble, but nowhere close to that ever since, or any other company I can think of. So if you can think of one, hit it in the description. I just can't not think of one that's lost 60% of the value in a bull market like this, okay? And so now let's get into the case of why these people love Alibaba and why they really think they're going to make a lot of money by owning this stock now. And let's not forget, guys, I mean, this company was the largest global IPO we've ever had, okay? And so that's where it started. Then you're looking at the top 100 digital companies, and you might recognize some of these companies as we scroll down, and they're number 11 right behind Facebook, for crying out loud, right ahead of Intel. And then you're talking about, when you look at the 30 most popular stocks among hedge funds, 2021 Q2 rankings, they rank number 8, okay? And there's a lot of stocks out there, and they rank number 8, guys. And then, of course, the other big thing to look at is just the top analysts. You still have, even after this fall, 16 buys, 1 hold, and 0 sales. You have an average of a 70% upward price target on this thing. The low is 170, and then the high is 275. And you can see Goldman just came out 3 days ago with a buy. You got another guy with $200, JP Morgan 210, Bank of America 209. And you just scroll down this list and you can see everything is so much higher than what the stock is right now. And that's what a lot of people licking their chops thinking, wow, if this thing can ever turn around and start heading north, they're going to make a substantial gain. Then, of course, there's Ray Dalio, right? Bridgewater raises $1.25 billion for its largest China fund. This just came out November 24th. And what I mean when I say Ray Dalio basically goes all in on China and Alibaba, they're raising $1.25 billion for its third investment fund in China, okay, not their first one. And so they're looking at buying up Chinese stocks, especially Alibaba, which you'll see what they own there. But first, let's hear from the man himself and why he is making this bet.
I just know China very well, and I come as a perspective, with a perspective as an investor. I've been going there since 1984. I know leaders, and I know how they're thinking, and I know the moves that they're making in a detailed way. And I'm just trying to share what that perspective is. In terms of the element of let's say, a transfer of wealth, or let's call it common prosperity. Yes, there's a world, in this world right now, there's a move to common prosperity. I think that that move, what does it mean at a technical level? That's not take your money away. But here, I would say what are called progressives here are much more left than what we would call progressives or whatever the Chinese policies are doing. But yes, worldwide, there has to be common prosperity, or let's call it broad prosperity. And the question is whether that's going to come about by productivity or not. It doesn't mean that you're going to have like a communism that's going to take all of that. There's going to be a lot of productivity in China. And so, again, diversifying the portfolio.
And the man puts his money where his mouth is. I should say your money where his mouth is, because it's not his money, it's everybody else's money. But if you look at Alibaba here, he owns $487 million worth just in the Bridgewater hedge fund. And you can see last quarter increased it by 131% and increased his shares by almost 2 million shares. And he's not alone, because Charlie Munger obviously has been, beating the drum for Alibaba for quite a while now. And he boosted the long position Alibaba by over 80% during Q3 to over 302,000 shares. And so, of course, a lot of people like to see, guys like Munger and Ray Dalio, who have obviously, they're billionaires for a reason, but they've been very successful in investment and everything. And obviously, they've rode this thing all the way down, dollar cost averaging in, because they not only believe in the company as a turnaround, they also believe in what China's doing and the growth that's going to happen in China. And so, it's another reason people flock to it. Plus, value investors, they love those two guys, and plus the valuation of Baba has gotten almost absurd at this point in time. I mean, you're talking about a PE ratio of 19 when the industry average is 23, I believe it is. Price of sales of around 3, and the industry average is around 4.5. And so it's just, it really is almost absurd. You don't think it can fall anymore, and it just keeps falling, okay? And the more it falls, the more that valuation looks really good, okay? And especially with the success this company has had. Now, of course, that's the argument why people are really trying to get into this. They're trying to hang on, right? And so what's the argument? What's the camp that says stay away? No matter how low it drops, just stay away. And as far as I'm concerned, guys, it all starts with the crackdown in China, right? I mean, so far, the crackdown basically has triggered this massive sell-off in all these tech companies and just a whole bunch of companies, and erased about $1.5 trillion from not only Baba, but the rest of the stocks in China. And they hadn't spared any sectors. You can see right here. These are all the sectors they have started cracking down on since November of 2020. And you can see tech and the internet companies lead the way by a mile. And of course, just go ahead and focus on Alibaba in itself. I mean, you're talking about a country, a communist government that has fined Alibaba $2.8 billion. This started in April, right? So that's a huge fine. Then they said, okay, Alibaba, you got to pay us $15.5 billion over 5 years for our common prosperity fund, or whatever it is they're doing there. That was in September. And so that's about $18.3 billion out of Alibaba's pockets over the next 5 years. And of course, the Chinese government isn't done there, because they're going to take more money from them in taxes, because they're going to take the key software, or have taken the key software enterprise designation away from them. This gave them the ability to pay income taxes at a reduced rate of 10%. Going forward, Alibaba's effective tax rate will be around 25%. And so it already had a negative income on its income statement this quarter, but that's going to be even greater. And this is the difference, is it paying like $300 million to the government versus around $900 million to the government. So that's going to be a huge hit to their financials. And of course, they just recently fined them $500,000 again, them and other tech companies over there, for cases they found going back all the way to 2012. Either they didn't like or something they were doing, or something like that. It was antitrust cases or something. So, it seems like when they want to hit them with a fine, they just hit them with a fine or hit them with something else. So they're taking a lot of money from Alibaba in itself. And plus, don't forget about what they've done with the labor over there. So it's going to be interesting to watch, to see how much more labor they're paying now. They've kind of changed how they're doing things over there in China with their labor force. And so that's going to hurt Alibaba most likely as well. And then the other thing is that makes people really nervous to invest in this is if the company is going to be able to comply with what the SEC wants from them. And what they want to be able to do is they have to comply with the American auditing standards for 3 years in a row. And then, more importantly, this is the big one. The rules also require firms prove to the SEC they are not owned or controlled by an entity of a foreign government, and to name any board members who are Chinese Communist Party officials. And of course, the one thing you have to keep in mind with this is, even if Alibaba wants to agree to this, will the Chinese government let them? As you can see what I mean here, this happened on November 26, where Beijing presses Diddy to delist from the US over data security fears. And so, of course, to me, it's a legitimate fear in the case that this is the first time we know that, a country literally will ask a company to delist. And by asking, I mean tell them to delist. I mean, they don't have any choice if they really want them to delist. And so, do I see them asking about that? No, but I wouldn't put anything past the government over there after seeing all the other stuff they've done to Baba and these other companies. And so that wouldn't surprise me a bit. And, to wake up one day and see your company is going to delist, you can imagine what's going to happen to that stock. You'll have a chance to get out all right, but it's going to be a major discount from where you bought it most likely, okay? And so, of course, the last thing, I think this one is really legitimate if you've been keeping up with numbers, and I've been presenting this probably about 4 or 5 months ago, is the growth factor in China. And you can see what I mean here. This is the GDP for China and the forecast as well. And you can see their GDP has been declining for years, okay? Coming all the way down into the crash, pop back up. But you can see, even right here, it has been declining this year and projected to continue to decline. And why this is really important is because Alibaba completely depends on China, right? I mean, their Chinese commerce retail made up 63% of the company's revenues. China commerce wholesale makes up 2%. And so they really, like local consumer services, make up 5%. Cloud computing. So they really depend on China for this. So if their growth does slow, obviously that will hit Alibaba's financials and their growth as well. And I think this is why you see institutions obviously selling out. You see new positions at 119, sold out positions at 452. And you can see the new positions around 4 million shares, sold out positions 24 million shares. But of course, there's going to be plenty of institutions that continue to increase their positions and hold their positions, just like Ray Dalio and Charlie Munger are doing for their hedge funds. There'll be plenty of others, especially as the price gets lower and lower, okay? Because this is a dominant company in their space. And so, as far as what I'm doing, I'm just looking at this thinking the risk reward has gotten so insane and the valuation is so crazy that, I'm going to take some gambling money. I'll pick the level I'm going to get in at. I'm definitely not going to try to catch a falling knife at this point in time, because every time somebody says, can't go any lower than this, it goes lower, okay? And I've showed you the charts. The support really in there below 130, 125, you make an argument for it if you really want to. I think it held that for about 17, 18 days way back in 2017, I think it was, or something. But, when something breaks a key level, it usually tends to fall faster because everybody starts to get a little nervous. And some people are so far down at this point in time, they're like, man, I need to, salvage what capital I can. Of course, write it off on taxes and maybe look to get back in after, after the correct amount of time, maybe even started in January of next year and see if they can ride it back up. And so, this to me is gambling money for sure. I would not do a big position or anything like that. I'm not even looking for a long position. For me, if this stock, think about it, where it's at now, if it can get back up to, 200, 210, somewhere in there in a year and a half, maybe 2 years, you're looking at a 60% gain. Even if it takes 3 years, whatever it is, I mean, that's nice. I know it's not 2020 money. We can double your portfolio in 3 months. But, that's just something to look at, because I think the odds of them being delisted at this point in time, at least for the next 2 years, are low because they still have time, right? They give them time for that, unless something really bad happens between America and China or something, because the fundamentals of the company are pretty sound. I mean, it really depends on, to me, more than anything, China. That's the biggest risk as far as what they're going to continue to do as far as crackdowns, and then will their GDP continue to slow, the growth and everything, because that would definitely affect all these companies. And so that's the biggest one. As I said, it's gambling money. It will be a small position. And for me, let me know which camp you're in. I'm kind of in the middle. What is it, Sweden or Finland or whatever? It's always neutral. That's kind of where I'm at. I understand both sides of the argument. I just made it for you. And so, I just want to kind of give you a different perspective where you can see it in one video, what both camps are saying. And, just hit me in the comments where you're at, what you're doing and stuff like that. Are you riding this thing down? Are you waiting for it to bottom out and show you an actual reversal to confirm that or not? All right, so if you got anything out of it, please hit the like, subscribe button for me, guys. I really appreciate that. And never forget to hit that link down there at the bottom. Sign up for a BlockFi account to earn 9% on your Stablecoins, 9.5% on your Tether, and 4 to 5% on your other cryptocurrency, as well as earn the 1.5% back on Bitcoin for every purchase you make on that credit card, guys. I will see you later.